On January 24, 2023, Hindenburg Research, a US-based investment research firm, published a 106-page article on India-based Adani Group with the title How the World's Third Richest Man is Pulling the Largest Con in Corporate History, which has sent shock waves through the corporate community and has subsequently wiped off more than $100 billion market capitalization from 7 group companies after fraud and market manipulation allegations from Hindenburg. Adani Group is an Indian multinational conglomerate headquartered in Ahmedabad. It was founded by Gautam Adani in 1988 as a commodity trading business, with the flagship company Adani Enterprises. The group's diverse businesses include ports, power, renewable energy, mining, airport operations, natural gas, food processing, and infrastructure. In April 2021, Adani Group crossed $100 billion in market capitalization, and in April 2022, it crossed the $200 billion mark, becoming the third Indian conglomerate to do so. In November 2022, it reached $280 billion mark. Interestingly, more than 60% of the Adani Group's revenue is derived from coal-related businesses. The company has been expanding aggressively in recent years, with plans to become one of the largest coal mining companies in the world. The Adani Group firmly denied the accusations, calling them nothing but a lie in a 413-page strong reply that failed to bring back investor sentiment, which did not slow down the rapid sell-off. Hindenburg replied saying that Adani reply tried to lead the focus away from the actual issue, instead brought the national sentiment to the picture, claiming that their report amounted to a calculated attack on India. While this reply and counter-reply continues between Adani Group and Hindenburg, let's first understand why Hindenburg is so concerned about Adani and what is the benefits it gets by disclosing the facts about Adani Group. There are high chances that you might have heard about Adani as the third richest person in the world, but you could be hearing about Hindenburg for the first time. Hindenburg is an American investment research firm founded by Nathan Anderson in 2017. The company is named after the 1937 Hindenburg disaster, an airship accident which they characterized as a human-made disaster. The company operates on an interesting business model with a focus on short selling. It simply means that they make money when a company stock falls after their investment. So it also means that Hindenburg makes a lot of money if the Adani stock falls after their report is published and everyone believes in it. And yes, this is a very interesting way to make money, which is absolutely legal. The firm, after months of thorough research, publishes findings on its website that allege corporate fraud and misconduct of companies. Companies that have been the subjects of their reports include Adani Group, Nikola, Clover Health, Candy, and Lordstown Motors. These reports also feature how it play a critical role in exposing fraud and protecting investors while holding short positions in the company before publishing reports. Hindenburg revealed the findings of their 2-year investigation, presenting evidence that the $218 billion Indian conglomerate Adani Group has engaged in a brazen stock manipulation and accounting fraud scheme over the course of decades. Gautam Adani, founder and chairman of the Adani Group, has amassed a net worth of roughly $120 billion, adding over $100 billion in the past 3 years, largely through stock price appreciation in the group's 7 key listed companies, which have spiked an average of 819% in that period. The Hindenburg Report alleges that Adani has engaged in a range of corporate misconduct, including environmental violations, tax evasion, and bribery. The report makes several allegations against Adani. Firstly, it accuses the company of engaging in fraudulent practices to inflate its profits. It claims that Adani has inflated the value of its coal imports by over $3 billion by using shell companies to over-invoice the cost of coal. The report also accuses Adani of environmental violations, particularly in relation to its coal mining operations. It claims that the company has violated environmental regulations by dumping coal waste into rivers and failing to control air pollution. The report also alleges that Adani has misrepresented the amount of land it has acquired for its coal mines, and that it has violated the rights of local communities in the process. The report also accuses Adani of tax evasion by using a network of offshore companies to avoid paying taxes in India. It claims that Adani has used a web of shell companies in tax havens such as Mauritius, Singapore, and the Cayman Islands to move money around and avoid paying taxes. Finally, the report accuses Adani of bribery, claiming that the company has paid bribes to local officials to secure mining licenses and environmental approvals. It alleges that Adani has paid over $200,000 in bribes to officials in the Indian state of Maharashtra. The Hindenburg Report has had significant implications for Adani and the wider business community in India. The report has caused a sharp drop in Adani's share price, with the company losing billions of dollars in market value. It has also led to calls for greater regulation and transparency in the Indian business community. The report has also highlighted the risks of investing in emerging markets, where corporate governance standards may be weaker than in developed economies. The report has led to renewed scrutiny of Adani's business practices and raised questions about the role of foreign investors in promoting responsible corporate behavior in emerging markets. Adani has denied the allegations made in the Hindenburg Report, describing them as blatantly false and malicious. The company has issued a series of statements refuting the report's findings and accusing Hindenburg Research of being a foreign-funded, research-driven short-seller hit job. Adani has also threatened legal action against Hindenburg Research and its analysts. The Indian stock market regulator, the Securities and Exchange Board of India, has also launched an investigation into the allegations made in the report. The response of Adani and the Indian government to the report has been defensive, but it remains to be seen whether they will be able to fully refute the allegations made by Hindenburg Research. The investigation by the Securities and Exchange Board of India is ongoing and may shed more light on the matter. In the case of Adani, the allegations made by the Hindenburg Report are particularly concerning given the company's size and importance in the Indian economy. Adani is a major player in the Indian energy sector, with plans to become one of the largest coal mining companies in the world. The company's aggressive expansion plans have led to concerns about its impact on the environment and local communities, as well as its corporate governance practices. The allegations made by the Hindenburg Report are not the first to be made against Adani. The company has faced criticism from environmental groups and local communities in India over its mining operations, which they claim have led to pollution and displacement of communities. Adani has also been accused of using aggressive tactics to silence critics, including journalists and activists. The response of the Indian government to the Hindenburg Report has been mixed. While some officials have dismissed the report as a motivated campaign, others have called for greater scrutiny of Adani's business practices. The investigation launched by the Securities and Exchange Board of India is a step in the right direction, but it remains to be seen whether it will result in any meaningful action against the company. In conclusion, the Hindenburg Report on Adani has highlighted the risks associated with investing in emerging markets and the need for greater transparency and accountability in the global business community. The allegations made by the report are serious and should be taken seriously by investors, regulators, and the wider business community. While it remains to be seen what the outcome of the investigation into Adani will be, this is an opportunity for us to reflect on the importance of responsible corporate behavior and the role that investors can play in promoting it. Thanks for watching, and we hope that this video has provided you with a deeper understanding of this important issue and the implications it has for investors and the wider business community. If you have any comments or questions, please leave them in the comments section below. Don't forget to subscribe to our channel for more videos on important issues in the world of finance and investing.